If you're looking for how Bitcoin will hit $700,000 and which alt is ready to go 100x from here, listen up, because Arthur Hayes just put on an absolute masterclass on how to play altcoins over the next 2 months. And he did not hold back. If you're holding anything other than Bitcoin right now, you need to hear what he said. He started by zooming out, painting a clear picture of the macro setup. Inflation and rate cuts have been in sharp focus this month, but he's already predicting what comes next.
What is the expectation and trajectory of money printing? And so I don't, my belief is that Trump hasn't even gotten started. He's gonna have all the Legos in place to really juice the US economy starting in.
That's the backdrop Arthur is betting against. And while of course he's stacking Bitcoin, he's also calling out altcoins that can deliver massive returns.
My 2028 target is in the 100x plus sort of return.
But here's where it gets really interesting. He gave a surgical breakdown of what's working and what's not, and where the money's actually flowing.
Investors have punished projects that either A, never made any money, or B, made money but didn't give it to the token holders. And So if you're a project that is not buying back your token, is not giving back emissions to stakers, we as the crypto retail investor, or even some institutional investors, we don't want to touch it.
And if you're trying to figure out how to play this upcoming alt season, he lays out a full masterclass.
This is the system that those in charge have chosen to create, and the population is going along with it. So fuck it, I'm going to own the casino where the plebs are going to gamble.
This is Arthur at his best, cutting through the noise, calling out the grifters, and handing out a real map for asymmetric upside over the next 2 months. So guys, without further ado, let's welcome back to the channel, the man, the myth, the legend, Arthur Hayes. Let's get into it. All right, Arthur, welcome back to the channel, man. It's great to have you here again. Next week, we have a really, really big week, right? We've got the Fed meeting on Wednesday. You got the big stock market expiration on Friday. CPI and PPI just dropped, and everyone's asking, what is the next move that the Fed's going to do? Are we going to see a quarter point cut, half point cut, no cuts? And how do you think the markets will react?
No, I think right now, I haven't looked at this morning at where the 2 years trading, 2-year Treasury note. I believe it's off something like 50 or 60 basis points over the last sort of week and a half, 2 weeks after the non-farm payroll print, the negative revision to jobs data in the US. I didn't check what PPI came in overnight, or CPI came in overnight, but I guess PPI was lower than expected 2 days ago. And obviously we had Powell pivoting at Jackson Hole, basically opening the door for rate cuts. And so I think that it's probably going to be a 50 basis point cut at the Fed. I think Trump investors want more. And obviously that's why Trump is putting all the pressure on Fed Governor Cook. There's rumors that, I can't pronounce her name correctly, Kugel, however you pronounce that name. I saw a rumor somewhere floating around that, maybe she had some issues with her own, mortgage applications, and, being a little bit more, I guess, street smart, she decided to just resign before Trump and the DOJ put the screws on her. And so I think that one way or another, just like every other president in U.S. history, the president will get the monetary policy he desires. You can take a look at Lyndon B. Johnson back in the 60s and Fed Governor Martin. Supposedly, Johnson invited Martin over to his house in Texas and physically assaulted him to get him to reduce rates. You had Nixon and Arthur Burns, Nixon putting a full court press with Treasury Secretary Connolly and others in his cabinet administration to make sure rates were lowered. And obviously, you have President Trump brow bashing Jerome Powell. And, just like every other Fed governor, Jerome Powell will provide the monetary policy that the politicians want, which means lower rates. It might take longer than you want, but it's going to get there. So I think we are in a Fed rate cutting cycle, even though, my own personal belief is that inflation will prove to be sticky in the next 18 to 24 months. And, if you don't own hard assets like gold, Bitcoin, US, whatever stocks in the US are doing well, you're going to feel the pinch of higher inflation.
You think that, so we're going to continue to get rate cuts throughout into 2026? How many do you think we're going to get, and how?
I don't know. It doesn't really matter at the end of the day, right? The Besson and Trump need money to be printed to fund their agenda. And so the Fed's going to cut rates. There's going to be, maybe it's not direct QE, but there'll be different ways in which money is printed. Maybe it's through the mortgage market. Maybe it's through the banks lending. Maybe it's through these sovereign wealth fund deals that Trump is doing with other nations. Maybe it's through the something like 100 billion or however much there was allocated to the Department of Defense as equity to then leverage to then buy stakes in resource companies like MP Materials to help with rare earths, whatever. There's so many ways in which they can provide credit to the system. And yes, this credit will positively affect some particular sectors more than others. But the best thing about Bitcoin is that we don't care where the money is going. We know that as there's more dollars, yuan, euro, yen in the world, that currency is being debased, and this asset that we own that is a fixed supply is going to go up asymptotically.
So we recently had Henrik Zerberg on the channel. I don't know if you know who Henrik is.
I'm not sure. I'm not familiar with him.
He had a pretty interesting thesis. Normally in crypto, we talk about the 4-year cycle and how Bitcoin follows that. And we usually say that it's around the halving, and that's kind of the 4-year cycle. He believes that Bitcoin follows actually like a business cycle, and he sees that coming to an end in the next couple months. Mostly the thesis that he has around that is that retail just doesn't have any money, and they're going to stop buying things, and you can see the job losses. And of course, when that happens in these stocks, if businesses are making money, then equities will go down, and we'll see kind of a whole market crash. Do you think that we're coming to an end of this bull market cycle in this year, or do you think we'll extend it out?
I think we're starting to get to the real meat of the cycle, middle of the cycle, because if you think about, Trump's a new president. Obviously it's the second term after the Biden administration, and his first term, he's a very populist president. He did the biggest sort of handout to American people since Andrew Jackson with or probably LBJ with sort of the COVID stimulus checks, right? That's not a very traditional Republican sort of measure to basically say, let's just hand out money to people, make sure that they stop bitching while we lock them in their house for the flu. And so when that happened, he is, had bona fide credentials as a person who's he wants to win elections. He doesn't have ideology behind it. So winning elections means providing free shit to people. He provided the free shit during COVID. He provided the free shit in 2017 with one of the largest tax cuts ever in American history. And he's going to provide more free shit. Otherwise, him and his, Trumpian Republicans are going to get voted out of office in 2026 and then in 2028 in the presidential election. So I think he knows exactly what he needs to do, which is provide free shit and print money. And that's what he's going to do. And now, obviously, the Fed and certain individuals within sort of the bureaucracy that is the American government have been sort of stymieing his efforts. But, domino after domino is being knocked down. And, by, middle of next year, it's going to be full steam ahead in terms of the Fed's on board, no more Powell. Maybe he's got 4 out of 7 Fed governors, and he can do some other funky things with the interest on reserves or the discount window. And you have Besson doing these sovereign wealth fund deals. You have possibly Fannie and Freddie ending conservatorship, and now they can lever their balance sheets and add about $4 to $5 trillion into the mortgage markets, allowing people to re-leverage on their houses. So yes, if the consumer runs out of cash, what does the American consumer do when they don't have money? They borrow it. And so if I reduce the cost of money, then you can borrow more. And so I think that's why the price of money in this instance matters. Now, I'm more of a quantity of money guy, but I can see that, you can say the American consumer is tapped out, the housing market's, a bit overbought. Well, if I cut rates from 4.5 to 2, well, then you're going to take more leverage and buy more stocks and, max out that credit card and buy a new car and take out a home equity loan. So I think that's, a very short-sighted sort of explanation if you sort of believe that the Fed's going to start cutting rates and Trump is going to unlock all this liquidity on Fed balance sheets, the mortgage market. And, another thing that people are not really paying attention to is Wells Fargo has just been paroled out of jail. They were not allowed to increase their balance sheet for many years after the whole fiasco the criminal sort of customer shit that they did back. I don't remember exactly what it was, but I think in middle of June or early July of this year, they were finally allowed to increase their balance sheet. There's a very famous macro analyst Zoltan Pazar, who estimates that they have about $450 to $500 billion of capacity in the balance sheet to buy treasuries and other debt securities now that they can grow their asset base. And so you have another liquidity engine in the commercial banking system in the United States. So I don't really care a fuck about the real economy. All I care about is the credit, and the credit's going to flow, and it's going to flow into Bitcoin.
Yeah, that makes a lot of sense. So you got Besson and Trump talking a lot about stablecoins, reinforcing the dollar debt and the dollar global dominance. And I think you've talked about a lot about this $34 trillion number that could flow into stablecoins. Can you explain a little bit about that?
So I wrote an essay called Buffalo Bill, and I gave a presentation in WebEx in Tokyo on the same topic. And basically, my thesis is that Besson has a problem: de-dollarization. The U.S. government defaulted on its debt essentially in 2008 when it decided to bail out the banking system rather than let the credit contract and root out all the bad debt in the system. And as foreign holders of debt, that were like, well, what the fuck? Why am I holding this debt when the U.S. is not going to safeguard the currency? I'm going to buy gold. And so you can see the percentage of ownership in central bank reserves of gold is on a secular rise starting in basically 2009. Mm-hmm. And ultimately, all these countries around the world who produce the things that the Western world wants, right? The global South, the BRICS countries are the ones that have the resources, that have the labor, and they basically make things and sell it back to, America and Western Europe for cheap prices. That era is over. They want to say, why am I working this hard to accumulate this asset that you're depreciating at, I think, about an 8% CAGR every year? I'm going to buy gold. Mm-hmm. And so Beston's like, well, who's going to buy all this debt that I need to issue? The federal deficit's actually not decreasing under the Trump administration. It's growing, just as I thought it would. This Doge thing was a farce. And, Trump, again, they need to provide the goodies to the people. So the deficit is only going to get larger. So who can buy this debt that Besson has to issue? Nobody wants to buy it at the long end because, there's duration risk, there's interest rate risk. They're increasing the supply a lot. So, he can't issue, 5, 10, 30-year bonds in the size that he would like. So he has to issue in the T-bill market. Now, the reverse repo facility was at $2.5 trillion. His predecessor, Janet Yellen, or somebody on her staff, decided that they were going to increase the amount of treasury bills issued to draw that money into the system. That was a $2.5 trillion stimulus starting in September of 2022. And that's when crypto, gold, everything, stocks took off as Yellen essentially juiced the markets in the face of Powell conducting quantitative tightening and raising rates. But that's done. Who else can buy all these T-bills, these trillions of dollars of T-bill that Besson needs to issue every year? Well, the first thing is the Eurodollar market. There is all these dollars sitting offshore that the federal government cannot monitor, that are outside of their control. And, they're doing things that the U.S. government might not want them to do. Maybe they're financing projects that China wants them to finance and not projects that Trump wants them to finance. Why aren't they buying U.S. Treasury bills? Well, the theory that I had and supposition was that Besson could basically remove the implicit guarantee on Eurodollar deposits, because every time the banking system fucks up, especially outside of America, the Fed and the Treasury rush to the rescue, open their swap lines, and make sure that the Europeans and everyone else who has all these offshore dollars in banks has liquidity so they can, be current on all the debt. So to remove that, and so if I'm a Eurodollar depositor in a foreign bank, well, what do I do now? I can go get a stablecoin, because a stablecoin is essentially backed by the U.S. government. Because what do Tether and Circle and others who are dollar-pegged stablecoins have? They either have a bank deposit in a chartered U.S. bank. If you're too big to fail, like JP Morgan, Citibank, and those guys, they have an implicit government guarantee. If you're not too big to fail, after the 2023 regional banking crisis, we now know that every single deposit in the U.S. banking system is de facto guaranteed by the government. So I know that if I have $1 in a U.S. bank, I will never not have $1 in a U.S. bank. They will always bail out the banks. And if I have a treasury bill, that's a liability of the U.S. government. What does the U.S. government have? They have a U.S. dollar printing press, which they can print infinite amounts of dollars for essentially no cost. And so if I have a stable coin that has either a bank deposit or treasury bills, mandated essentially by law, will be mandated by law with the Genius Act or some other piece of legislation, then my money is guaranteed by the U.S. government. Versus I hold this U.S. dollar, which they're removing that guarantee. And you're seeing strategists across Europe wondering, well, if Trump doesn't like what we're doing geopolitically, could he remove the dollar swap line with the ECB or with whatever foreign central bank? And Trump has threatened these sorts of things before. So it's definitely something to be wary of. And then the second thing is you have all these people around the world who want dollars, which is why Tether is so popular. Tether's not really popular in the United States because in the United States, you have a dollar. And if you're American, you have a bank account, you can send dollars around pretty easily, pretty cheaply. But if you're in LATAM or developing Asia, you have a highly inflationary currency. You have deposit rates below nominal GDP. So you're getting fucked by your banking system, by the politicians inflating away your money. What do you want? You want a dollar if you're talking about fiat. But the regulators don't want you to have a dollar. They want to inflate away your money in their local currency. So they prevent the large foreign banks from coming in and offering banking services in dollars. So what can they do? Well, everyone has a Facebook account. Everyone has a Twitter account or X account. And so these Western technology giants can now be greenlit to offer banking services through their super apps. And so you're going to see WhatsApp offering payments. You're going to see X offering payments. And if the local regulators bitch and moan that all of a sudden they're losing control of their locals' money because Zuckerberg and Musk and Bezos have control of this money through their apps, well, then Trump's just going to sanction them. Oh, you don't want to let the U.S. tech giants operate in a free manner? We let your companies operate in America? Well, 100% tariffs on you. Oh, guess what? All of you Asian elite politicians, you all steal from your population and stuff your money at JP Morgan high net worth accounts. Well, I'm going to sanction you too. And so you no longer have access to all your dollars unless you let our large tech giants operate in your country without any restrictions. And so all of a sudden, now you unlock trillions of dollars in the global South from people who want a US dollar bank account, but their local regulators don't want them to have it. So now Bessa can stuff these people with a treasury bill at whatever yield he wants. 1%, 2%, 3%, whatever it is, it doesn't matter. It's better than having a Philippine pesos and Argentinian peso, right? Those are the types of things that have massive inflation. So that is where I get the sort of $34 trillion TAM of like possible money that could flow into stablecoins. And I think it makes geopolitical sense for Bessa and Trump to pursue this. You're seeing them beat the drum about why stablecoins are very good. There was a report written to the Treasury Department, I forget how many months ago, and they estimated that $2 trillion would flow into stablecoins and an outline for the Treasury how it worked. So obviously they believe that this is something that is good for America's monetary policy, and then they're going to let the private sector go out and spread the stablecoin sort of thing around the world, and they're going to buy treasury bills, and that's the end goal. They don't care about innovation or any of that stuff. It's an end way to get treasury bills bought from a price insensitive buyer. So that's sort of my whole thesis on stablecoins, and obviously that flows down into now DeFi, right? Because now once I have a stable coin, I have, the building block of a DeFi Lego. I can take this stable coin, I can lend it, I can leverage it, I can trade it and do all these different things. And now I'm familiar with a digital wallet. And so using a MetaMask or a Phantom or whatever across the global DeFi ecosystem becomes very, very easy. And that's what pumps up certain projects that I mentioned in the essay, Athena, EtherFi, Hyperliquid, and Codex. But so that's sort of my macro on stable coins, which feeds into sort of like positions on DeFi protocols.
Can you go a little bit further? And do you think that this, let's say, I don't know, let's just say quarter, 10 trillion of that, or 15 trillion, whatever, maybe it's 30 trillion, come into the market from fiat into stable coins. And then, yes, the DeFi, that kind of segue into DeFi makes sense, considering people can now use these stable coins and these DeFi protocols. But we've seen a pretty good correlation, usually from stablecoin increases to obviously the overall crypto market cap increasing, but also as it's an indicator of the kind of a bull market being on when the stablecoin market cap continues to increase. And then that tends to flow into other volatile crypto assets and altcoins and things like that. So can you just explain a little bit about how much you think that, let's say, that 34 trillion, whatever, comes into the market? How much would that affect the altcoin sector?
I don't have the specific ratio, but in the presentation that I gave, I assumed that there was about 10 trillion of stablecoin deposits that would percolate around the markets. The protocols that I was shilling, Athena, I said it would 51x, basically based on people searching for higher yields in the treasury yield, going and using their synthetic dollar and the way that they're using the basis trade within Bitcoin to generate that yield. I think about a 34x improvement on EtherFi, as people now can spend the stable coins using their offline payment services and doing the sort of like banking services that EtherFi offers. And then Hyperliquid is something about 120 or 130x uplift, because it's going to become the largest exchange of any type globally now that you have all these people with stable coins who now want to trade on chain. Why do they want to trade on chain? Because they can. It's easy, high leverage, offers the type of products that they're interested in. So that's sort of where I want to focus in terms of like, obviously Bitcoin's going to do well. I don't know what that number is, but it'll be less than those in terms of the uplift. But sort of the riskier parts of the curve that'll benefit from this stablecoin adoption, I think, are these high cash flow generating DeFi projects. And the great thing about the zeitgeist now and sort of the investment community in the crypto space is that investors have punished projects that either A, never made any money, or B, made money but didn't give it to the token holders. And so if you're a project that is not buying back your token, is not giving back emissions to stakers, we as the crypto retail investor, or even some institutional investors, we don't want to touch it. I don't give a fuck if Sequoia and A16Z is on your cap. Go fuck yourself. Where's my money? And so I think we're finally getting around to that ethos, and these projects that are going to do well are going to be paying us as the token holders for making them successful.
Right. Makes a lot of sense. You also said that you think stablecoins can make the Fed irrelevant. Can you elaborate a bit more on that?
So why does the Fed relevant? Because they set short-term rates. So they set the effective Fed funds rate. They have a band. They administer the interest on reserves, which is usually at the lower end of Fed funds. They also set the reverse repo rate, and which basically is at the high end of the Fed funds range. And if I'm a Treasury secretary and I'm issuing debt to some private institution who's a profit maximizing institution, well, if the Fed is offering a higher rate than what I am as the Treasury on a T-bill, then I'm just going to stick my money in the reverse repo with like a money market fund. Or if I'm a bank, I'm just going to lend it to the Fed at the interest on reserve. So I effectively, as a Treasury, cannot issue debt below where the Fed has the lower bound of the Fed funds rate. Now, if I have a stablecoin issuer who by law can only either A, put your money in the bank, which yields you almost nothing because too big to fail banks don't need deposits. They have enough. Or you can buy a Treasury bill. You can't buy anything else. You can't put it in reverse repo. Can't buy any other newfangled securities. I've regulated you by law. These are the only two things you can do. Well, now, I can set the short-term rate wherever I want, because the marginal capital is not coming from money market funds. The marginal capital is coming from stablecoin issuers, and they want to earn an interest margin, a yield on all these dollars that they have. And so they'll accept whatever yield I give them as Secretary of Business. So if I think that the economy needs a 2% rate, okay, well, I'll sell T-bills at 2%. And there will be this effective Fed funds rate, assuming if I can't control the Fed governors. But in reality, the market's going to trade down at whatever 100 basis points below, or whatever the number is. And so because these stable coins are regulated into buying the thing that I'm selling, I can sell it to you whatever price I want. And so another trick that they can employ to essentially neuter the Fed, unless the Fed plays along and does what they want.
That makes sense. So Matt Hogan recently said that stable coins, won't hurt the economy. They'll just take profits from banks. Since savers can fund borrowers directly through DeFi. Is this something that you agree with?
I think the commercial banking system will become irrelevant unless one or two of them adopt stable coins, right? And this is why the whole fight about paying interest on them is a big thing. Because if I can easily pay interest as an issuer, why would I want a JP Morgan account? JP Morgan, I don't know what it pays, like 1.5%, 2% or something like that. I don't know. I don't have enough accounts, but I think that's around about the rate that you get as a depositor, JP or Citi or Wells Fargo, one of these large, too big to fail banks. But Fed funds is 4.25 to 4.5%, right? Money market fund yields much higher than that. And so the banks either have to raise their rates to match where the stable coin is, because now I can literally, with a click of two buttons, move my money. It's all digital money. You have a digital bank run into stable coins, or I have to raise my rates and reduce my profitability. Now, the best thing about a stablecoin issuer is that they don't have hundreds of thousands of useless employees doing all manner of bullshit, right? Yeah. Compliance is automated. KYC is automated. There is none of this legacy technology from the early 1990s percolating throughout your tech stack, which is a large bank. You don't have a bunch of fucking useless managing directors making $1 to $10 million a year scattered around your organization doing fuck all, right? So Tether is the most profitable bank in human history, making something, I don't know what the per employee numbers. I had an essay about it, but it's in the hundreds of millions, I think, per employee. They have something like 100 employees. So, this is what a bank should be doing. I'm going to take your money and I'm going to pay you an interest rate on it. Then you can take this piece of perfected collateral and you can take it around the DeFi Lego system and re-leverage it. You can trade with it. You can earn more yield with it if you want. But me as a bank, I just do something very simple. I just take your money and I let you send it from A to B very, very safely. That's what banks should do. They should be doing all this other bullshit that we allow these banks to do in TradFi. And I think I can't wait for them all to be zeros.
Me too. Same. So we've got a lot of all-time highs going on right now. We got the stock market all-time highs. You got global liquidity all-time highs. You got gold all-time highs. It feels like our market is lagging behind a little bit. I mean, we're not. Bitcoin's not so far away from all-time highs. It's pretty close, but it's been moving sideways. It feels like forever. And same with the altcoin market, still lagging behind. When are we going to see some of this global M2 coming into the crypto market?
I think the premise of that question is a bit flawed because Bitcoin is the best performing asset when you think about currency debasement ever, right? Okay, yes, the S&P 500 is up in dollar terms, but deflate that by gold since 2009, the S&P has not recovered its gold price from 2008. Deflate the housing market by gold, again, and not anywhere close to where it was. Tech stocks are probably one of the only things that have big US tech is probably one of the only things that's done well deflated by gold. If you deflate things by Bitcoin, it's not you can't even see it on the chart. It's just so ridiculous about how well Bitcoin has performed. So, I got asked this question like, why is there a difference between TradFi and crypto? There's not. Actually, when you talk to a TradFi person and sort of really get down to what they believe, what do they believe? They believe the same things that we believe. They believe that when something happens, the Fed, the Treasury, the BOJ, the ECB, the PBOC, the SNB, they will print money. And what happens when they print money? They buy bonds. So in their mind, because they know bonds and they did a CFA or they went to business school, okay, well, if I buy the 10-year at 5% and it goes to 4% and I lever that 30 times, I become Ray Dalio, right? That's their mind. That's all he fucking did. He went long the fucking 30-year bond on leverage. That is interest rate parity. I can't fucking shit on them. Good on you, like for running that fucking trade. But that's the trade. We all believe in the same things. It's just that crypto is the faster horse. Bitcoin has been the best performing asset on this currency debasement theme across any asset class. So it's not that we have a difference of opinion. We believe the same things. We believe the money will be printed. It's just that we in crypto choose an asset that performs better. And so if you take a very short time horizon, like, I don't know, from a couple months ago and you say, oh, why isn't Bitcoin at 150,000? Well, I'm sorry that you bought Bitcoin 6 months ago, but for anyone who bought it 2, 3, 5, 10 years ago, they're laughing. Like, I don't give a fuck, right? I have so much outperformed the debasement of the dollar and every other fiat currency. Like, why am I like being all moody that, Bitcoin is not, hitting a new all-time high every day? It doesn't matter that the S&P is at 6,700 or whatever it is. It's still down in gold terms from the crisis. So I think people need to readjust their perspective on this. If you thought that you were going to buy Bitcoin and the next day you were buying a Lamborghini, you're probably getting liquidated because it's just not the right way to think about things.
Okay. Yeah, that makes sense. So you mentioned a few altcoins that you were bullish on. Is there any other ones that you think, any other sectors, or do you really think that the DeFi, like the thesis of, any kind of protocol giving money back to token holders is going to kind of like significant amounts is going to be the ones that kind of outperform? But is there any other that you haven't talked about that you're bullish on?
Maybe Lido, e-staking, that kind of stuff. Again, I'm not a jack of all trades. I have a very concentrated portfolio. I understand my names very, very well. I can't say that these are going to be 1,000x names. Like if you buy some like, $5 million shitter meme coin and it goes to whatever, like, yeah, cool. You're going to make more money than me, but like, I'm not taking that kind of risk. I need to put a lot of capital in something and not be looking at my phone 24/7. So I think it depends on the type of investor you are. You might say, oh, well, I'm not going to make 1,000x return on any of these names. Yeah, I 100% agree with you. But, these are also names that actually have product market fit, thousands of users, billions of dollars of annualized revenue. So they're not going away tomorrow. Like, whatever, the hottest thing is in the new L infinity space, that's going to have no clients, and, maybe it goes up, but I just that's not in my sort of milieu.
So I'm going to ask you, this is something that I'm personally really interested in, because when you and I talked in, where was it? Was it Singapore, I think, last? You had mentioned, hype. And at that point, I felt like I'd already missed the boat. I think it's probably up, I don't know, maybe almost 2x since that point. But it's something that I keep getting my attention back to. I still haven't bought any yet. Do you think at this valuation, it's currently sitting at FDV, almost $57 billion right now, there's still a lot of room left to grow?
Absolutely. I don't know what the number, what the the developer count is now, but when I spoke to Jeff, it was like 10 people. Maybe it's marginally higher now. As a person who's run a large exchange, the ability for this team to ship code is absolutely insane. I think the team in Athena is about 20 people. So you have some of these amazing teams who are able to ship product better than any centralized company can ever do, because they do one thing, they do it well. Hyperliquid is a leverage trading platform. They're moving into spot. With the HIP-3 sort of permissionless listing mechanism, now you can permissionlessly list perpetuals, which is something that a lot of other protocols have staked their name to. DYDX is one they did very, very well, but unfortunately they decided not to pay anyone out of the lots of money that they made, and that's why their token's a piece of shit. So I think that Hyperliquid next goal is to beat Binance. How does Hyperliquid get from here to the number one exchange of any type globally? Is it a fait accompli? Of course not. It's going to take a lot of work and luck and all that sort of stuff. But that's what I'm betting on, and I think it's moving in the right direction. The amount of energy that we've seen on these proposals for the USDH from every major stablecoin issuer tells you how integral Hyperliquid is to the trading ecosystem within crypto within basically 18 months, if you want to think about it.
Yeah.
So the forward on this is amazing. And as more people learn about this, it's only going to get better. The one thing that gives me a bit of pause is the massive unlock of the team tokens in November. So we're going to have to see how that sort of plays out in terms of positioning. But as I said in the presentation, my 2028 target is in the 100x plus sort of return if we get this sort of massive move into stablecoins. So that's sort of why I think. Yeah.
On hype.
That's what I went on stage. And
so you think there'd be like a $5,000 token?
Yeah.
Shit. Okay. That's it. All right.
Yeah, if we're saying there's going to be 10 trillion in stablecoins, this could be the largest exchange of any type globally. And there's, what is this debasement? What's the problem with debasement? It's that it makes everyone who doesn't own a lot of financial assets a speculator. Because what is it? Oh, I don't have enough money to buy a house. I don't have enough money to buy one Bitcoin. I don't have enough money to do these things that I want to do. But there's this leveraged trading venue where if I pick the right, piece of shit coin, or I pick the right meme stock in the American, casino stock market, I can get the car. I can pay off my student loan for the worthless degree that I got. And so it's insanely bad for a society that this is what we're being reduced to, but this is the system that those in charge have chosen to create, and the population is going along with it. So fuck it, I'm going to own the casino where the plebs are going to gamble.
Makes sense. I want to get your take on kind of corporate treasuries and these digital asset treasury companies. They're raising billions of dollars for all kinds of assets, mostly Bitcoin and ETH, but now you saw some announcements today of some big Solana ones, and then there's several others that are getting into it as well. Do you think this is a net positive for the industry? Do you think that this could be a another kind of FTX moment or something like that? If it unwinds in a bad way, if we go into a big altcoin correction, are these guys going to be underwater? What are your thoughts?
So I am disclosure. I'm an advisor for Upexi, UPXIUS, a Solana DAT. So obviously I intrinsically believe that this is a meta that will continue in the sort of the TradFi corporate finance circles. However, I would say that there's only going to be one or two winners in each category of coin, right? In Bitcoin, you've got MicroStrategy. It's kind of hard to come and do a Bitcoin DAT and beat MicroStrategy. I know that there's been the Block 11 and a few others and the Nakamoto. But yeah, it's going to be very hard to upsit Michael Saylor. And then you have sort of the Bitmain and those in the East space, obviously Upexi and some others in the Solana space, and pick your fucking shitcoin, and there's going to be a DAT on that. So the question for you as an investor is, okay, basically what they're doing is corporate finance alchemy. If I can get my stock price high enough, the market cap high enough, if I can get my trading volume high enough, then there opens up all these institutional investors who are allowed to buy the debt and equity derivatives that I can sell. And the higher value of my stock, the more crazy shit that I can offer, which basically allows me to, positively accrete Bitcoin or some other shitcoin on my balance sheet and thus benefit equity investors. So it's a game of size and scale and distribution. And this is what Michael Saylor has showed us, is that you have a universe of underperforming money managers or indices that want the Bitcoin risk, that amazing volatility adjusted performance, but are not allowed to buy Bitcoin ETFs because they're considered usually currencies or commodities, and that's not within their mandate. They're not allowed to buy Bitcoin and custody it themselves because that's just not what they do as a money manager. So they can only buy public equity companies. And so if you're able to pitch them a public equity company, but has this crypto underlying, then they'll buy whatever you're selling and they'll pay $2 for $1 or $3 for $1 or $10 for $1, whatever. They don't give a fuck, right? They're just following rules. And so that's the game, but it's a game of scale. And there's only going to be one or two per each category. And then obviously, as we progress further in the cycle, the newer issuers are going to resort to riskier forms of corporate financial derivatives to generate positive equity price performance. And that's what will get people into trouble when the prices start falling. And so I think that there'll be some massive DAT debacles at the bottom of the cycle, right? FTX failed at the bottom of the cycle. BlockFi failed at the bottom of the cycle, not at the top of the cycle, not when we're on the way down. But when we have the most despair, when Bitcoin's already down 70% from $1 million or whatever it is, right? That's when these companies go belly up and they trade at massive discounts. And there'll be interesting opportunities for arbitrage funds in the public markets around the world, buying these into a discount and then liberating the crypto from the balance sheet.
Mm-hmm. So we're halfway through September almost. Historically, October has been a really great month for our markets. Let's say that we have just an exceptionally strong kind of October, maybe November. Let's say, I don't know, Bitcoin's up at 150, 175, something like that. ETH is ripping. And it's starting to feel kind of really parabolic. And how are you going to play your portfolio? I know that from the gist of what I got from what we just talked about was that you think that this market's going to extend well into 2026. But if things start feeling really euphoric in Q4, are you going to take some profits off the table, or are you going to still hold strong? Or what are you kind of looking for? How are you going to assess your portfolio and make some decisions?
I really care about what is the expectation and trajectory of money printing, and so I don't. My belief is that Trump hasn't even gotten started. He's going to have all the Legos in place to really juice the U.S. economy starting in, middle of 2026. And so the question is, what is the market forward on that money printing? I don't know what that looks like. If I believe that the market's expecting something so insane in terms of the amount of money printing that Trump can do, then okay, I'll take some chips off the table. So I don't have a price level in mind. It's more of a feeling of like, okay, well, is the expectation on the money printing too high or too low? I'm writing a piece right now about the collapse of the euro, predicated by a French default. And so I think there's some other things happening within the global markets that could continue to propel this notion of money printing. And at the background, I have to recognize that we are in the midst of a unipolar to multipolar change in world order. And change for politicians is bad because, what do they do when change happens? They print money to make sure people feel okay. Mm-hmm. And so if I overlay all these things together, I have a very bullish outlook for the amount of money that's going to be printed between now and the end of the decade. The question just becomes, what are the expectations within the crypto ecosystem about, or just a general macro ecosystem about what that is. I think that people are underpricing the upside in equities, in crypto, and everything. They don't realize how badly all these governments need to print money. Yes, it's going to end in absolute Armageddon at the end of this
Yep.
cycle, whenever that is. But I don't think we're there yet. Governments are only starting to get the mojo back about, I'm going to print money to buy defense goods, to hand out handouts to the population. China is, battling with its own sort of deflation and doing drips and drabs of stimulus. They'll come around to the party too, in some way, shape, or form. The Japanese have to do it. The Europeans have to do it. The Americans have to. Everyone has to do it at the same time. And we have this AI robotics deflationary effect, which could completely destroy the fractional reserve banking system if everyone doesn't have a job and now has to service all these debts. What do? Do we fully reserve the system and print money to make sure the banks are okay, or do you let everyone go bankrupt? I don't know, right? We have a lot of big societal choices, and usually when humans have big societal choices, the government chooses to print money first. So I think we're in this first inning of this massive change in the how we organize this global society, and therefore I don't believe in the 4-year cycle. I believe that we can continue ripping through, $150, $775, $200,000 Bitcoin because of this massive macro overlay of what is happening right now between now and the end of the decade.
Yeah, very bullish. Arthur, thanks so much for coming on, man. For anyone who wants to follow what you're doing, we'll put the links down in the description below. Is there anyone else where they can follow you? What's the best place?
Crypto Haze on Substack, Crypto Haze on X, and that's the primary way. And hopefully you guys attend the Korea Blockchain Week and Toka 2049. We'll be delivering 2 keynote speeches on the main stage.
Awesome. Thanks for coming on, Arthur.
Thank you.